All right, today we're jumping right in for a technical deep dive on MongoDB, ticker MDB. We're going to peel back the layers, look past all the noise in the headlines, and get right into the charts to see what the pros are looking at. Let's do this.
So here's the big question, right? You've got Wall Street analysts, and they are overwhelmingly saying buy on MongoDB. But does the chart actually agree with them? Is this the right price at the right time to even be looking at this thing? That's exactly what we're here to figure out.
Okay, so first things first. Before we get into the really deep stuff, let's get our bearings. What's the general feeling out there for MDB? What's the public view? And yeah, that view is pretty darn clear. You've got 43 analysts covering this thing, and the consensus is a solid buy. Their average price target is sitting around $358, which, from where we are now, suggests a potential upside of about 12%. So, on the surface, everything looks pretty bullish.
But, when you start to break it down by time frame, things get a little more interesting. That long-term weekly trend, it's a beast, a 9 out of 10, super strong. But see what happens when we zoom in. The daily, the 8-hour, the momentum just kind of fizzles out into neutral territory. This is a huge clue. It tells us the stock isn't weak, not at all, but it's just consolidating, kind of chopping sideways, building up energy for its next move.
So, that brings us to the weekly chart. To really understand what's going on, you have to zoom out. You have to look at the big picture, the way an institutional trader would. And boom, this weekly chart, this is really the heart of the whole thing today. The professional take here is that this stock is not running out of steam. This is not a topping pattern. Instead, what you're seeing is the construction of a solid base, what the analysis calls a launchpad zone, and it's being built for the next major leg higher.
So, okay, what are the key levels we need to be watching? Well, down here, between $280 and $300, that's your floor. That's major support. You've got a ton of technical factors all coming together right there, which makes it super strong. Then, looking up, the immediate hurdle is around $350. Now, what's interesting is how the price keeps tapping on that level. It's not getting slammed back down, it's just knocking on the door, building up energy for a potential breakout. And if it does break, the next targets are way up in the 420s and even higher.
I mean, the evidence is really starting to pile up, isn't it? Price is holding strong above its key long-term moving averages. The chart structure is a textbook uptrend, higher highs, higher lows, and maybe most importantly, MDB is outperforming the S&P 500. It's a market leader. You put all that together with the fact that volatility is shrinking, and you get this perfect metaphor. The price is like a coiled spring, just waiting to explode.
Okay, this is where things get really cool. How do we know for sure that MDB is a market leader? Well, this analysis uses a pretty special custom tool to see that, kind of like a trader's secret weapon.
It's a custom tool called RSI_PR, and I know that sounds super technical, but the core idea? It's actually really simple. Instead of just looking at MDB's price by itself, it measures how strong MongoDB is relative to the entire market, to the S&P 500. Then it just applies a couple of classic tools, RSI and Bollinger Bands, to that relationship to see if its outperformance is getting stretched or has more room to run.
Let's just quickly walk through how this thing works, step by step, so it makes total sense. First, it just divides MDB's price by the price of the S&P 500 index. That gives you a simple price ratio, a score of how it's doing against the big leagues. Second, it runs the RSI indicator on that ratio, not on the price. This tells us if its relative strength is getting overbought or oversold. And finally, it wraps all of that in Bollinger Bands to see when its performance is getting statistically extreme, which can often signal a turning point.
All right, so we've got our big picture launchpad idea from the weekly chart. We've got our secret weapon tool. Now it's time to zoom in. Let's decode that daily chart to find the final clues and nail down our timing.
And there it is. Just like we saw in those momentum scores, the daily chart is just chopping sideways. Ever since early September, the price has basically gone nowhere. Now, to the average person, this might look boring, maybe even a little bearish, right? So yeah, you look at this and you think, meh, the price is just drifting, nothing to see here. But this is where you have to look deeper.
Because what's happening under the hood, that's the whole story. The key insight here is that the volume has been drying up while the price goes sideways. And that is a powerfully bullish sign. It's a classic footprint of what's called reaccumulation. It means the big institutions are quietly buying up shares from anyone selling without making a big scene. It confirms that the supply of stock for sale is just gone.
And the other volume indicators? They're basically screaming the same thing.
One indicator that tracks where the smart money is going has just flipped from red to green. That's a huge tell that demand from the big players is starting to creep back in. At the exact same time, another indicator that just tracks buying versus selling pressure shows that the sellers have completely vanished. You put those two signals together, it's a classic sign that strength is building just below the surface.
So here's the million-dollar question, right? How do we take all this analysis, the weekly launchpad, the sneaky accumulation, the smart money signals, and actually turn it into a concrete, actionable plan?
Well, the plan laid out here is a specific, defined risk options play called a bull call spread. Now, don't worry if you're not an options expert. All this really is a way to bet on the stock going up to a certain point, by a certain time, but with a built-in limit on how much you can make and how much you can lose. It's a very controlled way to play this. The plan is to get in if the price breaks above 318, aim to take profits between 335 and 340, and have a hard stop if the price closes below 305.
And look, with any trade plan, this part is absolutely critical. Discipline. This might be what you'd call an A-plus setup, but risk management comes first, always. With this strategy, your max loss is whatever you paid for the spread, period. And the exit plan is crystal clear. If the price gets near your target, you take profits. And if it closes below that 305 support level, the whole idea is wrong, and you get out. No questions asked.
So when you boil it all down, the technicals are pointing to a stock that isn't topping out, but is actually building a launch pad. And that boring sideways price action we're seeing, it's not weakness. When you pair it with the drying up volume, it's actually a massive sign of underlying strength. All the pieces of the puzzle seem to be clicking into place, which leaves us with just one final question. Will MDB achieve liftoff?